Blowing an account isn't just about losing money. It's about what it does to your mind. Every trader who's been in the game long enough knows that sickening moment when the account balance hits zero, or close enough that the damage feels irreversible. The charts don't just mock you, they haunt you. The numbers in red aren't just figures. They're a reflection of choices, impulses, and moments of weakness. And while people outside the trading world might shrug and say, "It's just money," it's never just about the money. It's the mental storm that follows. The shame of admitting you lost it all. The heavy silence when friends or family ask, "How's trading going?" And you scramble for an answer that doesn't sting. The guilt of knowing you ignored the rules you swore you'd follow. The stop-loss you moved, the oversized position you justified, the revenge trade you thought would save you. In those moments, you're not just broke. You're broken. What makes blowing an account so devastating isn't simply the financial setback. After all, money can be earned again. It's the way it shakes the foundation of your identity. Trading isn't just a side hustle or a job for many. It's a dream, a vision of freedom, mastery, and self-reliance. When that dream gets crushed in one series of trades, it feels like the dreamer is crushed along with it. You start questioning everything, your discipline, your intelligence, even your future in the markets. And here's the hard truth. This isn't going to be another lecture on position sizing, stop losses, or risk-reward ratios. You've probably read those rules a dozen times already, maybe even tattooed them on your trading journal. The problem isn't knowledge, it's psychology. The market didn't just drain your account. It drained your confidence, your patience, your sense of self-control. That's why this discussion isn't about charts or technical strategies. It's about the part of trading most people ignore until it's too late, the aftermath in your mind, the sleepless nights replaying every mistake, the pit in your stomach when you think about re-entering the market, the subtle fear that maybe you're not cut out for this after all. The truth is, every trader faces this crossroads at some point. Blowing an account isn't the end, it's the test. What matters most is not the money you lost, but the mindset you build in response. Because the real account isn't in your broker's platform. The real account is in your head. And that's the one we're here to talk about. When you blow an account, the first thing that hits isn't silence, it's noise. A loud rush of thoughts, doubts, and what-ifs all competing for space in your head. You stare at the balance, half expecting the numbers to bounce back like a glitch, but they don't. The reality sinks in like cold water, and then the emotions crash one after the other. The first wave is shock. You can't believe it happened. You tell yourself you were careful, at least careful enough. Maybe you'd been winning just yesterday, maybe the account had been growing steadily, and now it's gone in what feels like a blink. That disbelief lingers, like waking up from a bad dream you can't shake off. Then comes the anger. Sometimes it's directed at the market. This setup was perfect. The market is rigged. Other times it's aimed at the broker, the spreads, the news event you didn't see coming. But eventually the finger turns inward. You replay every mistake in your head. Moving the stop loss, doubling down on a bad trade, ignoring your own rules. Anger at yourself burns the hardest because deep down you were the one who pressed the button. After anger, the heavy cloak of shame settles in. This is the hardest one to carry. You don't want to talk about it, you don't even want to look at your trading journal. You avoid conversations with friends or family because the question, "How's trading going?" feels like a dagger waiting to be twisted. Blowing an account isn't just a private failure, it feels like an exposed one, even if nobody else knows. And finally, there's guilt. Guilt for wasting money, for wasting time, for not being disciplined. Guilt for letting yourself down. If you borrowed money to trade or sacrificed other responsibilities, the guilt cuts even deeper. It's not just the market you're wrestling with, it's the weight of your own conscience. The emotional fallout of a blown account is brutal because it forces you to confront yourself. Unlike most jobs, there's no boss to blame, no faulty system, no colleague to throw under the bus. In trading, when the account goes to zero, the mirror is your only witness. And that mirror is often the harshest judge. For many traders, trading isn't just an activity, it becomes a part of who they are. The markets aren't just a place to make money. They're a stage where intelligence, discipline, and ambition are tested. You start introducing yourself differently. I'm a trader. Feels powerful. Feels unique. It becomes an identity badge you carry with pride. But when you blow an account, that badge suddenly feels fake. You start questioning if you were ever a trader at all, or just a gambler dressed up with candlestick charts. The internal dialogue gets toxic fast. Maybe I'm not cut out for this. Maybe I'm just lying to myself. The account loss doesn't just hit your finances. It shakes the very foundation of your self-image. This is where things get dangerous. Because when trading becomes your identity, a blown account feels like a personal death sentence. You're not just losing money. You're losing the version of yourself you've built around trading, the dreamer, the risk-taker, the future success story. The psychological pain comes not only from what you lost, but from what you fear you'll never become. And let's be honest, ego plays a big role here. Deep down, many traders see themselves as different from the crowd, smarter than the average 9-to-5er, willing to take risks others wouldn't dare to. That mindset fuels ambition, but it also sets you up for collapse when reality strikes. Because if you believe trading was proof of your brilliance, then blowing up your account feels like proof of your stupidity. This identity crisis can spiral into two dangerous extremes. On one end, you may feel like quitting altogether, walking away because you can't face the humiliation, internal or external. On the other hand, you may double down recklessly, desperate to prove to yourself and maybe to others that you are the trader you said you were. Both paths are emotional reactions, not rational ones, and both often lead to more pain. Here's the truth. Trading is what you do, not who you are. It can shape you, test you, even transform you, but it should never define your worth as a person. Losing sight of that distinction is why many traders collapse mentally after blowing an account. They tied their self-worth to their P&L, and when the numbers disappeared, so did their sense of self. If blowing an account teaches anything, it's this: your humanity, your intelligence, and your future are not measured in lot sizes or equity curves. The trader is bigger than the trade. The account may die, but you, the person, are still very much alive. The cruel irony of blowing an account is that, for many traders, the story doesn't end there. The very moment your balance goes to zero, a dangerous voice whispers, "I'll make it back." It's the start of what's known as revenge trading, the desperate, emotional attempt to reclaim what was lost, not through discipline, but through raw impulse. At first, it feels justified. You tell yourself, "The market owes me." You convince yourself the next trade is the one, the setup of the year, the perfect opportunity to bounce back. You might even fund the account again immediately, rushing deposits into your broker as if money itself can heal the wound. But the problem isn't the account, it's the mindset. And the mindset is broken. Revenge trading is like walking into a casino right after losing your rent money at the slots. Logic says you should walk away. Emotion says you can't leave until you win it back. That emotion fuels oversized positions, reckless entries, and blind hope. Instead of trading your plan, you're gambling with your pain. And pain is a terrible trading strategy. The cycle usually goes like this. You blow an account. You rush to deposit more, determined to redeem yourself. You take a huge trade, far bigger than your plan would allow. It loses fast. Instead of stopping, you double down again. Before long, you've blown the new account too. Each time the cycle repeats, the damage compounds, not just financially but psychologically. You don't just lose money, you lose trust in yourself. That's the real danger of revenge trading. It convinces you that you're out of control, that your emotions run the show. The more you chase, the further the market runs away. And here's the harsh truth. The market doesn't know who you are. It doesn't care that you just lost your account. It isn't out to get you. The only enemy in revenge trading is the one inside your head, the part of you that can't accept loss, that refuses to sit still, that treats trading like a fight instead of a craft. Breaking free from this cycle starts with humility, the courage to step back, to admit you're not in the right state to trade. But in the heat of the moment, most traders don't step back. They lunge forward, blinded by rage, digging a deeper hole. That's why so many traders don't just blow one account in their journey. They blow several, all in the name of revenge. The lesson is brutal but clear. The market will never return what you chase out of anger. It only rewards patience, discipline, and detachment. And until you conquer that impulse for revenge, the cycle will keep spinning. Blowing an account doesn't end when the balance hits zero. The account may be gone, but the scars remain. They follow you into every chart you open afterward, every trade you hesitate to place, every flicker of doubt that creeps into your mind. Unlike the financial loss, which can be replaced, the psychological scars are harder to heal. One of the first scars is fear of re-entering the markets. You want to trade again, but your finger freezes over the buy or sell button. Every setup feels like a trap. Every candle feels like it's out to get you. Instead of reading the market, you're reading your fear. You're not trading anymore, you're tiptoeing. Then there's overcaution. Traders who've blown an account often swing to the opposite extreme. They cut trades too early, terrified of another loss. They miss opportunities because they're too busy protecting themselves. While discipline is good, overcaution is paralysis in disguise. You may be trading, but you're not giving your edge room to work. It's like driving with both feet on the brake. You'll never move forward. For some, the scars show up as triggers, almost like PTSD. Maybe you lost everything on a news spike. Now every red folder event on the calendar makes your heart race. Maybe it was a single currency pair that drained your balance. Now just seeing that pair on the screen floods you with memories of loss. The market becomes a minefield of emotional landmines, and trading feels less like strategy and more like survival. But perhaps the deepest scar is losing trust in yourself. You can learn a new strategy. You can rebuild capital. But how do you rebuild confidence when you've watched yourself break every rule you promised to follow? When you've seen your discipline vanish in the heat of the moment? This loss of self-trust is often what keeps traders stuck, looping in the same cycle of hesitation, overtrading, or quitting altogether. And yet, there's a strange paradox here. These scars, as painful as they are, can also become your greatest teachers. They remind you of your limits. They show you the cost of ignoring discipline. They etch lessons into your psyche that no book or mentor could ever make as real. But only if you're willing to face them, process them, and grow through them. The scars of a blown account never fully fade, and maybe that's the point. They don't exist to haunt you, they exist to warn you. To remind you that trading isn't just about charts and numbers. It's about psychology, resilience, and the ability to control yourself in the face of chaos. At first glance, blowing an account feels like pure failure, a dead end, a hard stop to the dream of trading. But if you peel back the layers of pain, there are lessons buried inside that no book, course, or mentor could teach you with the same intensity. It's brutal tuition, yes, but it's tuition nonetheless. The first lesson is about humility. Nothing humbles a trader faster than watching their balance evaporate. You enter the markets with grand expectations, dreams of freedom, financial independence, maybe even early retirement, and the market responds with a harsh reality check. That humility is painful, but it's also the foundation of growth. Because until you accept that the market doesn't owe you anything, you'll always approach it with the wrong mindset. The second lesson is about discipline, or the lack of it. A blown account exposes your weaknesses in high definition. Did you move your stop loss? Over-leverage? Skip waiting for confirmation? Trade out of boredom? You can't hide from the truth when the numbers are gone. The market doesn't just punish bad trades, it punishes bad habits. And once you see those habits in the wreckage, you know exactly what needs fixing. The third lesson is about emotional control. Blowing an account forces you to confront the part of yourself that panics, that chases, that clings to trades long after logic says to let go. You start to see that trading isn't a battle against the market. It's a battle against yourself. Every blown account is proof that your emotions were stronger than your rules. And until you reverse that, the cycle repeats. The fourth lesson is about risk. You can read 1,000 times that risk management is key, but until you've seen what ignoring it costs, the words don't sink in. Losing a little stings. Losing everything sears the lesson into your memory. From then on, every oversized position feels like standing near the edge of a cliff. You'll never forget how quickly the ground can vanish beneath you. And finally, there's the lesson of resilience. Not everyone comes back after blowing an account. Many quit, defeated. But those who rise again discover something powerful. The ability to rebuild, to start small, to learn from mistakes. Resilience isn't taught, it's forged. And often it's forged in the fire of failure. Here's the paradox. The pain of blowing an account feels like the end, but for many, it's the beginning. The moment they stop treating trading like a shortcut to wealth and start treating it like a craft. The moment they stop chasing money and start chasing mastery. The account may be gone, but the lessons it leaves behind can become the foundation of a far stronger future. After blowing an account, the greatest danger isn't the empty balance. It's the broken mindset. If you jump back in too quickly, chasing losses, you'll likely repeat the same mistakes and spiral deeper. The real recovery doesn't start with another deposit. It starts with your mind. The first step is pause and breathe. This sounds simple, but most traders skip it. They're so desperate to erase the pain that they rush straight back into the markets, fueled by anger or desperation. But healing requires distance. You can't reset your emotions if you're still glued to charts, reliving every bad decision. Taking a break, days, weeks, even months, gives your brain the space to cool down and process what happened. Next comes honest reflection. Not the sugar-coated version, but the raw autopsy of your mistakes. Journaling helps here. Write down the trades that killed the account, the emotions you felt, and the rules you ignored. Seeing it on paper forces you to confront the truth. The account didn't blow itself, you did. And while that realization stings, it also empowers you. Because if you caused the damage, you can prevent it next time. From reflection, you move into rebuilding discipline outside of trading. Why? Because discipline is a muscle, and if you can't control yourself in daily life, you won't control yourself in the markets. Simple habits, waking up early, sticking to a workout, journaling consistently, even maintaining a budget, train the same mental muscles that trading demands. Patience, consistency, restraint. A strong life outside the charts builds a strong trader inside them. When you're ready to return, start with smaller stakes. Fund the account with what you can afford to lose without flinching. Trade microlots. The goal isn't to win big. It's to reestablish confidence and consistency. Prove to yourself that you can follow rules, not just hunt for profits. The smaller the risk, the freer your mind becomes to focus on process instead of pressure. Another key shift is detaching from results. Stop measuring your worth in daily P&L. Instead, measure your success by whether you stuck to your plan, whether you controlled your impulses, and whether you executed the trade you said you would. Results will follow, but only if the process comes first. Finally, adopt the long game mindset. A blown account often happens because traders treat the market like a lottery ticket trying to get rich fast. Recovery means rewiring that belief. Trading isn't about jackpots, it's about compounding. It's not a sprint, it's a marathon. The sooner you accept that, the sooner you trade with patience instead of panic. Rebuilding after a blown account isn't about proving the market wrong. It's about proving yourself right, showing that you can learn, adapt, and grow stronger. And here's the hidden victory. If you can bounce back from blowing an account, you've just built the resilience that most traders never develop. That resilience is what separates those who fade out from those who endure. Recovering from a blown account is one thing. Growing beyond it, becoming stronger, sharper, and unshakable, that's where the real transformation happens. If blowing an account is the wound, then long-term psychological growth is the scar that not only heals but also reminds you of the warrior you've become. The first step in long-term growth is detaching your identity from trading results. You are not your account balance. You are not your last trade. Too many traders fall into the trap of tying their self-worth to their P&L. Win a trade? You feel like a genius. Lose a trade? You feel worthless. That roller coaster is exhausting and unsustainable. Long-term growth means separating who you are as a person from the numbers on the screen. Trading is what you do, not who you are. Second, develop emotional calluses. Just like lifting weights toughens your muscles, trading experiences toughen your emotions. At first, a small loss feels devastating. Later, it becomes just another data point. Eventually, you learn to see losses not as failures but as business expenses, the cost of participation. This detachment doesn't mean you stop caring. It means you stop bleeding emotionally over every fluctuation. You respond instead of react. Third, embrace acceptance of uncertainty. The market is unpredictable. No strategy will give you 100%. No setup is guaranteed. Long-term growth means making peace with that. You stop trying to control the market and start controlling yourself. Once you truly accept uncertainty, you no longer fear it, you flow with it. Fourth, create a supportive trading environment. Growth thrives in the right soil. Surround yourself with traders who emphasize discipline over quick wins, process over profits. Whether it's a mentor, a community, or simply an accountability partner, having people who remind you of the bigger picture keeps you grounded. Fifth, invest in continuous learning. A blown account often reveals knowledge gaps, not just emotional ones. Growth means filling those gaps deliberately, studying risk management, refining strategies, and staying updated on market behavior. But more importantly, it means learning about yourself, your triggers, your biases, your emotional patterns. The best traders are students of the market and students of themselves. Finally, cultivate resilience as a lifestyle. Resilience isn't just for trading, it's for life. When you train yourself to bounce back from financial pain, you also prepare yourself to handle setbacks in relationships, careers, and personal goals. Trading becomes less about money and more about mindset, about who you are becoming in the process. In the end, the psychological growth from blowing an account isn't about avoiding pain forever. It's about becoming the kind of trader who can take the punch, learn from it, and step back into the ring smarter, calmer, and more prepared. The scars remind you where you've been, but they don't limit where you can go. Because once you've blown an account and rebuilt yourself, you realize something powerful. The market can take your money, but it can't take your mindset unless you let it. And that mindset, forged in loss and refined in discipline, is the true wealth every trader seeks. Blowing an account feels like the end of the road, feels final, humiliating, and devastating. But here's the truth. It isn't the end. It's a chapter. And often, it's the chapter that separates those who fade out from those who rise into maturity as traders. Yes, the financial loss hurts. But what truly matters is what happens after the loss. The shame, the fear, the identity crisis, the scars, these aren't just obstacles, they're teachers. They reveal who you are when the facade of confidence is stripped away. They force you to face yourself in the rawest way possible. And if you're willing to listen, they give you the lessons that no winning streak ever could. The journey of a trader isn't defined by the accounts they've blown, but by the mindset they've built after blowing them. Every great trader has a war story. Every resilient trader carries scars. What sets them apart isn't perfection. It's perseverance. So if you've blown an account, don't see it as your downfall. See it as initiation. You've joined the ranks of those who felt the sting, wrestled with the shame, and stood at the crossroads of quitting or rebuilding. And if you choose to rebuild, to learn, to grow, then you've already taken the hardest step toward becoming the trader you dreamed of being. Remember, the market doesn't care about your past. It doesn't care how much you've lost. It only cares how you show up now, disciplined, detached, and ready. The account can always be refilled. The real question is, can the trader be renewed? The good news? Yes. Because the greatest account you'll ever manage isn't the one on your broker's platform. It's the one in your mind. And once you learn to protect that, no loss will ever destroy you again. So here's the challenge. Don't let a blown account be your obituary. Let it be your origin story. Because the trader you become after a loss is often the trader you were meant to be all along.